Check, test. One, two, three, four. Good morning, ladies and gentlemen. Okay, this is good. We can just make the mids slightly sharper. दादा मिड्स को थोड़ा शार्प कर दीजिए और मुझे एक हैंड माइक दे दीजिए. ये ठीक है. मिड्स शार्प करके लॉक कर दीजिए. ओके. चेक चेक चेक. Check, test, one, two, three, four. This is a sound check. My name is Zenia Fernandez. Great. थोड़ा bass हल्का सा high कर दीजिए. To begin with, let's show gratitude to all of our sponsors, our platinum sponsor. Okay, good. We can lock this. 6, mic number 6, मेरे लिए lock कर दीजिए. Thank you so much. and gentlemen, my dear friends, it is time for us to begin with the conclave in 3 minutes from now. So I request you all to please make your way inside the ballroom and grab the favorite seat in the house. Requesting all our guests to please make your way inside the ballroom and take your seat. Also paging for our panelists of the very first knowledge session, Mr. Neil Borate, Mr. Darshan Engineer, Mr. Rajmohan Krishnan, Ms. Meenal Goel, requesting you all to please make your way inside the ballroom. Our chief guest and our guest of honor will be joining us shortly. Good morning. You know, I started to sort of get a little confused whether the conclave is happening indoors or outdoors. Because as you can see that even though it's not typically a networking break, zoro se networking chal rahi hai bahar. So much so that the hardest working person in the arena today is that guy who's been ringing the bell for the last 30 minutes. And I think everybody's thinking it's the soundtrack or it's ambience music, and no one is picking up the cue. Ki acha ye, this is call to action. But then, that is the beauty of events like these, right? Where this entire wonderful community comes together, familiar faces, lots of us who've been here time and again, lots of new faces, what we call fresh blood into the system, and therefore conversations like these are completely warranted. And as a host, it does sound, kind of feel like I'm interrupting these conversations that are happening in the room and outside, but I'm not. I'm simply here to redirect them slightly. So all of you who are in the room already, first of all, there are a lot of seats that are vacant up front, waiting for all those at the back to grab them. So you can use the next couple of seconds to shift around if you'd like to. Also, all of you have to help me out a little bit over here. जो भी सब हमारे दोस्त बाहर खड़े हैं, उनको क्यों करना है, उनको बताना है that the show has started, and I think the only way to do is the good old-fashioned way, where you put your hands together in जोरदार तालियां. Come on, help me out here, everyone. Keep clapping. Three people walk into the room. I would say that's a great beginning. Okay, let's take it from the top. Good morning, everyone. कैसे हैं आप? How are you doing this morning? Good, great, almost there. I had to beat a lot of traffic to get here. That breakfast welcome spread is very, very, I know. You have a lot of thoughts going on in your head right now. But I want to invite all of you to be fully present in the room today, because apart from great food and great conversations off this room, we are going to have some very honest conversations on the stage and in this room. My name is Zenia Fernandez. I'm your host for today, and it's my absolute pleasure to welcome all of you to the second annual conclave of the Portfolio Managers Association of India. One more round of applause for all of you, PMS community. You know, today we have one and only one agenda, and that is to bring this wonderful community, PMS, what we do, into focus. So if you've all seen the theme already, it says PMS in focus, and it continues with a distinct edge, because it's 2025, and we believe that while we all know where we stand right now, we're all very interested in where we will be going. So we have designed the agenda. We've invited speakers who will grace this stage and also give us some very honest insights and perspectives into how can we have sharper strategies, how can we have a stronger focus, most importantly, a stronger positioning, professionally, personally, a renewed sense of purpose. Answer the question of why are we doing this and how can we make people's lives better? So these are just some of the questions we aim to answer, but there is a lot more coming up. We have a power-packed agenda. Our chief guest, our guest of honor are going to give us a lot of food for thought, but also food for action, because I know that this is one such event where we're coming to not just be up to speed with industry mein kya ho raha hai, what are the best practices, but also personally have fulfilling experiences over here, and that is exactly what we are going to deliver this morning. So I'm going to quickly check with my team if our dignitaries are in the room. Are they here? Can someone quickly check and tell me, because we would like to kick off the conclave in a couple of seconds from now. I think they're right now being escorted to the room. But you know what? While that is happening, and someone please cue me once our dignitaries are here already. And while that is happening, मैं तो बोलते जाऊंगी. That's my job. I'm going to tell you what to expect. But I want to understand from a couple of you, how many of you been to an Apmi conclave or event before? Please, show of hands, everyone. Fantastic. Okay, quite a lot of you. So, let me come to you, and again, just a casual chat of what are you expecting this time? Yeah, is it similar to what you expect every time you come to a community event? या इस बार आप कोई नया सवाल लेके आए हैं?
Expecting the PMS industry to grow multifold, and as I can see the number of people participating, it is growing day by day. So it's a great thing. Maybe we will reach 50 lakh crore soon, giving a tough competition to the mutual fund industry.
I think the man has spoken on behalf of all of us. Can we have a huge round of applause? Thank you very much. I could see a lot of smiles on everybody's faces. So now let's extend that conversation, sir. And ma'am, sir, good morning. Good morning very much. What are your thoughts about what the gentleman just said?
I completely echo his thoughts.
Absolutely, same here.
Okay, same here. तो सर आपने हमको नया पढ़ाव दे दिया है, and I think we all are with you on that. Okay, let me come to that side of the room quickly. एंड यहाँ पे काफ़ी सारी साइड कॉन्वर्सेशंस हो रही है तो हम भी हिस्सा लेते हैं उसमें और पूछते हैं कि हो क्या रहा है यहाँ पे. ओके, व्हाट्सअप सर, प्लीज टेल मी what are you not just expecting but looking forward to today, besides of course meeting your colleagues and peers?
Looking forward to gaining some insight into the prospects of the industry and how to go about it, whether it is compliance or whether it is the growth or the taxation part of it. So many things to look at here.
Thank you very much. Yes, like I said, there's a lot to be put into perspective. One last question, and maybe, let's see. Maybe we'll go to, ma'am, you. Yes, you said you've, of course, been here before. If you could give us one word of how you would sum up 2025 so far. We've been through almost more than half of it. For this industry, one word. Ek shabd ya ek mantra, what would it be?
It's been a challenging year so far with the markets, with the compliances. So far, it's been challenging. And with the tariffs, of course.
It has been challenging. I promised you honest conversations, and that is exactly what we're having. And I am very, very happy that we're all in this room with, all these different perspectives, thoughts, and experiences, because the intention is by the time we leave the room this evening, we have answers to, if not all, but most of them. All right, I can see that our dignitaries are inside the room already. So ladies and gentlemen, let's kick off with the conclave, and we'll do it like we do it in our country by lighting the auspicious ceremonial lamp, a very simple but a very meaningful ritual which stands for clarity, for growth, and for shared purpose, the very values that guide us as the PMS industry. To do the honors to light the traditional ceremonial lamp, I'd like to invite our chief guest and our guest of honor, Shri Tuhin Pandey, Chairman SEBI, and Shri Ashish Kumar Chauhan, Managing Director and CEO NSC, will be joined by Mr. Bihari Lal Devra, Mr. Sushant Bhansali, Ms. Amisha Vora, Mr. Hiren Ved, Mr. Manish Bhandari, Mr. Vivek Vasudevan, Mr. Bhavan Shah, Mr. Deepak Shenoy, welcome sir, good morning. Mr. Sonal Minhas, Mr. Sandeep Jethwani, Mr. Ayush Mittal, Mr. Sunil Rohakale. Our board members joined by our chief guest and our guest of honor. Yes, you can clap, because with this, we officially begin with the second annual conclave of the Association of Portfolio Managers in India. Let's all right, let's capture this moment. So you can hand that over to me. Yes, let's just capture this moment in a lovely photograph, and let's have one more round of applause as we officially kick off the second annual conclave of the Association of Portfolio Managers in India. Apmi. Thank you so much to all of our dignitaries for doing the honors. Thank you very much. Thank you, sir. To formally open today's proceedings, I'd like to invite on stage Chairman of Apmi. He's a director at Abacus Asset Manager Private Limited and a very well-respected voice in the portfolio management space. With over 2 decades of experience across wealth management, taxation, investment strategies, we all know him as someone who brings a lot of depth and vision to Apmi's mission of strengthening the PMS ecosystem. Please put your hands together, everyone, as I invite on stage Mr. Bihari Lal Deora.
Thank you. Good morning and welcome to all of you. Esteemed Chief Guest, Honorable Chairman of SEBI, Mr. Tuhin Kant Pandey, our guest of honor, Shri Ashish Chauhan ji, distinguished members, respected dignitaries, valued partners and friends. A very warm welcome to each one of you. It's both an honor and privilege to inaugurate with our chief guest the second annual event of Association of Portfolio Managers of India. First and foremost, let me extend heartfelt gratitude to our chief guest, our guest of honor. Your presence is a source of inspiration for all of us. It signifies not only your personal commitment to the highest regulatory standards, but also the enduring and constructive partnership between India's portfolio management industry and the regulator. Your insight and vision have been instrumental in guiding our industry towards greater transparency, innovation, and investor protection. Thank you for your support and for gracing this occasion. Founded in December 2021, Apmi has aimed to be unified and credible voice for portfolio managers across India. From day one, we have worked alongside regulators, stakeholders, our members to raise the bar for transparency, professionalism, and ethical conduct. Through our dozens of formal submissions to SEBI and authorities over the last 3 years, we have played an active role in shaping regulation, addressing industry challenges, and building bridges of trust within the market. Today, I'm proud to share that we present over 320 plus SEBI registered portfolio manager, accounting for nearly 96% of PMS industry AUM, making Apmi the undisputed custodian of industry's best practices and the collective voice of our profession. This year, our landmark initiative has been the launch of online distributor registration portal, which was implemented with the unique Apmi registration number for NISM certified intermediaries. From January 2025 onwards, our distributor marketing PMS products in India will be formally registered with Apmi, and I'm glad to announce that we have almost 20,000 people who have registered on the platform. I'm also delighted to highlight as special features of today's program, the much anticipated sports session scheduled for this afternoon. This tradition of Apmi annual event, now in its second year, brings together members and stakeholders away from conference table to foster networking and teamwork. I encourage everyone to relish this unique opportunity to connect informally and celebrate our community spirit. To our members, your collective wisdom, unwavering commitment for the investors of this country, engagements are the backbone of Apmi. Whether through contribution to consultation papers or by participating in our governance committees, you drive our association forward and embody the spirit of professional excellence. As we embark on today's sessions and sporting events, let us reaffirm our shared commitments to raise standards, foster innovation, and enhance investor confidence. Together, under the stewardship of SEBI and through the engagement of all stakeholders, we are getting the foundations for responsible and robust growth in our industry. With that, now I have an honor and privilege to invite our chief guest, Honorable SEBI Chairman, Mr. Tuhin Kant Pandey, on the stage for sharing his insights. Thank you, sir.
Mr. Ashish Kumar Chauhan, MD and CEO NSC, Mr. Deora, Apmi Chairman, Mr. Bansali, Apmi Vice Chairman, Apmi Board Members, market participants, members of the media, ladies and gentlemen. Thank you for the opportunity to address you at Apmi's annual Conclave 2025. It's a privilege to be among professionals shaping bespoke wealth management in India. I urge you to use this event as a sounding board. At the end of it, each of you should have at least one key takeaway for your business. Today, I want to share my thoughts on the evolving portfolio management services industry and reflect on its opportunities, challenges, and responsibilities as a differentiated provider of wealth solutions. Why PMS matters today? In 1993, SEBI brought PMS under its regulatory ambit at a time when India's GDP was a modest US $279 billion. Back then, personalized wealth management was a luxury, an idea way ahead of its time. It was a service that only a handful of pioneering managers offered, relying on personal relationships rather than formalized processes. Bringing PMS under SEBI's regulatory ambit, separate from mutual funds, was also a clear sign of PMS importance as a distinct professional service. Fast forward to 2024, and India's GDP has reached around US $3.9 trillion, marking almost a seven-fold expansion since 1993 and cementing its place among the world's top 5 economies. That surge has also powered a boom in private wealth. The count of high net worth individuals and ultra HNI is increasing year on year. In this environment, standardized investment strategies may not satisfy needs of investors, the needs of customized risk profiling, high conviction opportunities, and built-in downside protection. That is precisely where PMS comes in. You do not merely offer access to markets, you provide one-on-one management that aligns client portfolios with their risk appetite, time horizon, and financial objectives, backed with full transparency and performance-linked fees. Let me take you through some of the numbers and what this signals for the industry. The number of registered portfolio managers rose from 361 at the end of FY 2021 to 479 as of June 30, 2025, showing steady ecosystem growth while maintaining quality. During the same period, the total client base grew at 12% CAGR, with discretionary PMS clients growing at 13% annually, and now making up about 96% of all clients. Discretionary AUM, which is non-EPFO PF, grew 23% annually, indicating increased client preference to delegate active management of their portfolios. This AUM also makes up over 40% of the organically sourced AUM, a sign of client trust in the industry. Non-discretionary and advisory client counts have declined, but their AUMs have risen. This is indicated that substantial PMS client relationships still exist in these categories. But this growth comes with a mandate to maintain trust and professional conduct. Clients are entrusting you with their capital and their future. Any fall in governance standards will erode that trust. A question to ask yourself: how are you reinforcing this trust in your own client relationships? Let me come to the SEBI support to the PMS ecosystem. SEBI has worked with Apmi to bring in a slew of reforms to support the evolution of the PMS industry. You have seen reforms aimed at ease of doing business, for example, streamlining the process to digitally onboard clients, simplification of disclosure documents, specifying clear guidelines on infrastructure adequacy, bringing PMS distributors under the oversight of Apmi, selection of a secondary benchmark made optional, and issuance of consolidated guidance by way of master circulars. An operational manual for registration and post-registration activities is also available, reducing SEBI's average processing time from 74 days in FY 23-24 to 49 days in FY 24-25. These are not just administrative conveniences, they are enablers for you to focus on carrying out your core business of meeting client deliverables. While PMS caters to sophisticated investors, we have worked with Apmi on reforms for protecting investor interest. Some of these reforms include norms for performance reporting and benchmarking, investment limits on related party transactions with prior client consent, disclosure of investor grievance data on PMS websites, mandatory fee calculation tool with high watermark, and most important, terms and conditions document. I'm sure you have several more asks from the regulator, and my team at SEBI is ready to work with you on the same. SEBI has formed a working group at Acme's request to address concerns of custodians, depositories, and other market participants. We look forward to their recommendations. And in the morning, I had an occasion to talk to Apmi board members, and I got some very good ideas. And we must do that, including, for example, on, we are talking of digital onboarding, how it can be even made simpler, and so on. I would like to assure you that though the PMS regulations were completely overhauled in 2020, that will not act as a bar in developing a more optimal regulation. Role of Apmi. Since its incorporation in 2021, Apmi has enabled structured dialogue between the regulator and industry. This partnership has been a model of co-creation rather than top-down prescription. Apmi has accelerated the implementation of SEBI's agenda for investor protection, regulation, and development for the PMS industry. I commend its office bearers, past and present, for their dedication. Apmi's way forward is to position PMS as the preferred choice for informed investors. There is a need to demystify the product with investor education and awareness sessions with simplified content. Apmi has to drive outreach programs to highlight the differentiated features of PMS and build trust among existing and prospective investors. The success of SEBI's supervision system for portfolio managers is dependent on accurate and timely data filed by all stakeholders. I must commend the efforts of the Off-Site Inspection Data Committee in Apmi for streamlining the process. I urge Apmi to continue its emphasis on maintaining data quality. Way ahead for the industry. Growing demand for customized wealth management outside of the traditional mutual fund space reflects investor sophistication. PMS's edge is its flexibility in delivering tailor-made strategies, but the industry must demonstrate that customization is a consistent capability, not just a slogan. You must ensure that clients understand the risk-return trade-offs, the bespoke nature of their mandate, and the advantage of directly owning underlying securities, benefits that pooled products may not match. Educating each client on their own unique risk appetite is the first step in building a truly diversified portfolio. Your client communications must be clear, eliminate ambiguity, communicate performance claims responsibly, and formally document any strategy changes. Many of your clients will have investments through mutual funds or other pooled vehicles. Your role is to complement these investments. By combining the benefits of mutual funds with the capabilities of PMS, investors in India can build portfolios that are both resilient and differentiated. Apmi and the industry must curb misleading claims being made by a few registered portfolio managers. Such exaggerated performance claims undermine trust and could stall growth of this industry. The PMS industry needs to modernize onboarding, reporting, and client engagement through digital solutions to stay competitive and trusted. SEBI's tech-enabled supervision also puts onus on portfolio managers and their ecosystem to embrace technology. In closing, I remind you that PMS industry is at an inflection point. You have a powerful position in place, a flexible regulatory framework, active industry engagement through Apmi, and a rising pool of informed investors. Sustained growth will depend on innovation, process strengthening, technology investment, and keeping clients' interests central. As Apmi enters its fourth year, we at SEBI remain committed to shaping a forward-looking regulatory framework that exemplifies collaboration and innovation. Thank you all. Jai Hind.
Thank you so much. Shri Pandey, thank you for your insights, for your time, for clearly reminding all of us as a community why PMS is in focus, and for also giving us insights into how we can get a distinct edge in the future. Thank you so much for joining us. So I'm going to request you to please come center stage and invite Mr. Biharlal Deora on stage to kindly present a token of our appreciation on behalf of Apmi. So request you to kindly accept this as a token of our gratitude. Let's have a thunderous round of applause, ladies and gentlemen. Thank you, sir, for SEBI's ongoing commitment in strengthening the PMS space. We're going to take back from you, sir. I'm going to request you to stay with me for a few more seconds. I'm sorry, I know you have to move on to other commitments, so we're going to make most of your time in inviting all the board members on stage. We'd like to capture a group photograph with Shri Pandey, requesting all the board members to please join us on stage. All right, we've got our perfect shot. Everyone, please stay with me on stage. We have two quick things on our agenda while I have you here. One is that we'll make the most of this opportunity and request Shri Tuhin Pandey to kindly unveil the annual report of Apmi. Can we have the annual report on stage, please? It's one document that I know every single person in the room is really looking forward to. Shri Pandey unveils it. Thank you so much, sir, for doing the honors. Thank you very much. Okay, we've captured this perfectly. Thank you very much, sir, for doing the honors. One last thing before we let you go is that joining us today on this dais are 4 board members who will be closing their 3-year term. They're from the cohort 2022-2025. 4 members actually, and we'd like to take this opportunity, take this moment to pause and offer them our gratitude and also present them with a memento so that remains with them. And of course, 2 of them, Ms. Amisha Vora and Mr. Deora, I believe that you are ready for your next stint already, or we should just wish you all the best, no, for now. Wishing you all the best. Can we please have the trophies on stage? And Sri Pandey, I'd like to invite Miss Amisha Vora forward. If you could please step forward, ma'am. And let's have a thunderous round of applause for Miss Vora. Pandey sir, I'm going to request you to present the next memento to Mr. Bihari Lal Deora, who's also the current acting chairman of Apmi. Also nominated to be back. All the best. Next, I'd like to invite forward Mr. Hiren Ved. Hiren sir, please step forward. Many congratulations on your successful term with Apmi. And finally, Mr. Sonal Minhas. On behalf of Apmi and the entire community here, thank you so much. All right, and with that, sir, we're going to allow you to move on to your commitments for the day. Can we have a thunderous round of applause once again for Shri Tuhin Pandey. Thank you for your leadership, which continues to shape the future. Thank you to all of our board members. Many congratulations and all the best. All right, everyone, please stay glued to your seats because now it is time for me to welcome to the stage our guest of honor for this morning. He is a stalwart in India's financial markets. As someone who has been personally looking at the revamping of India's modern capital markets, I call him the chief architect of it. He was instrumental in setting up the NSE in its early days. Later on, he played a very key leadership role at BSE. He is credited with introducing several path-breaking technologies and frameworks that have made our Indian markets faster, more efficient, most importantly, made us globally competitive. Now, under his leadership, NSE is leading from the front. They're driving market innovation. They're strengthening investor trust. They're building an inclusive financial access. And it's an honor for us to invite him on the stage and understand his perspective on how PMS space can sharpen its edge in this ever-evolving landscape. Please join me in welcoming him on stage. Managing Director, CEO at NSE, Shri Ashish Kumar Chauhan.
Shri Tuhin Kanta Pandey ji, Chairman SEBI, Shri Bihari Lal Deora, leadership and members of Apmi, friends from the PMS industry, representatives from capital market participants, media personnel, ladies and gentlemen, good morning to all of you. It's a privilege to address the distinguished members of the Portfolio Management Services community once again. I extend my sincere thanks to Apmi for inviting me to speak at this prestigious forum for the second consecutive year. It's always a pleasure to engage with such a dynamic and forward-looking group, the custodians of long-term wealth, drivers of innovation, and stewards of trust in India's financial system. This conclave is not just a celebration of the PMS industry's achievements. It is also a reflection point, a moment to reaffirm the collective responsibility we all share in shaping India's investment future. We stand at a decisive juncture. The PMS industry, once a niche offering for a few, is rapidly transforming into a strategic pillar of India's wealth management architecture. We are witnessing a remarkable era of economic transformation. India today stands proudly as the fourth largest economy and the fourth largest capital markets in the world. These achievements reflect the deep institutional reforms, macroeconomic stability, and increasing investor participation that underpin our capital markets. The Union Budget for financial year 25-26 further builds on this momentum. It combines continued fiscal prudence with developed focused measures, increasing capital expenditure while also offering significant tax relief. This fuels growth expands financial savings, and opens new avenues for wealth creators via the capital markets. The story of the PMS industry is deeply intertwined with India's broader liberalization journey. What began in early 90s as a bespoke offering for high net worth individuals and institutions has today matured into a full-fledged industry with close to 500 registered portfolio managers across the country. This growth parallels the transformation of India's capital markets, particularly the journey of NSE that began in 1994 when we started our operations. As NSE introduced modern, transparent, and technology-driven infrastructure, it laid the foundation for the PMS ecosystem to flourish. Our innovations, from electronic trading to benchmark indices like Nifty, have become essential tools for PMS managers in designing, evaluating, and delivering investor-centric strategies. The market capitalization of India increased 125 times since NSE started operations, and now it has reached 445 lakh crore or $5 trillion plus. Institutions like NSDL, NCL, and many others that NSE helped set up have helped bring certainty, lower cost, and enhance ease of doing business. India's market has been a strong avenue for wealth creation over the last 30 years. Estimates suggest household wealth accretion of 46 lakh crore in last 5 years alone, from 21 financial year to 25 financial year. Nifty, which turned 29 years this year, has grown by 8% CAGR in US dollar terms, which is very similar to S&P 500, which is also yielded similar numbers, 8%, over the same years or same period. Just as NSE has grown India's investor base, the PMS industry has evolved from a niche product into a strategic pillar of India's wealth architecture. This shared journey reflects a common mission to democratize investing, deepen market trust, and build financial resilience for Indian households. Beyond portfolio returns, PMS investments directly contribute to entrepreneurial growth, industrial expansion, and infrastructure development. Every PMS portfolio not only nurtures wealth for clients, but also fuels economic activity and creates jobs for many. The PMS industry has experienced extraordinary growth in the past 2 years, with assets under management doubling from 2.86 lakh crore in April 23 to 5.6 lakh crore as of June 25. This has been driven by three key forces. With over 8.5 lakh high net worth individuals in India, the demand for customized alpha-driven wealth solutions is growing rapidly. So rising HNIs and UHNIs have been the major force behind this. The digitization has also improved every aspect from onboarding to reporting, making PMS more transparent, accessible, and scalable. Today morning, we heard also some requests to reduce more friction, which we'll work on. Regulatory support that has been there on standardized reporting, disclosure templates, and suitability norms that have also brought in more investor trust in the products that you offer. I especially acknowledge SEBI for sustained visionary leadership in shaping the evolution of India's PMS industry. SEBI's balanced approach has been instrumental in fostering innovation while safeguarding investor interests. Initiatives such as standardized disclosure templates, performance reporting norms, suitability framework, and free transparency mandates have laid a strong foundation for long-term sustainable growth. Under the leadership of the new chairman SEBI, Shri Tuhin Kanta Pandeji, SEBI's resolve to deepen markets, enhance governance, and improve ease of doing business has further strengthened. Complementing SEBI's efforts is Apmi's strong role in industry building. Apmi has provided valuable leadership through self-regulation, operational alignment, and policy advocacy. Initiatives like the compliance calendar, standardized templates, and thoughtful policy submissions have created a better operating environment for portfolio managers. Apmi's knowledge sharing forums, including seminars, white papers, etc., are fostering continuous learning across the community. Most importantly, Apmi has nurtured a collaborative culture, a key enabler as the industry grows in scale and complexity. At NSE, our mission is to enhance trust and deepen markets by providing world-class infrastructure, data, analytics. We serve over 11.8 crore unique investors, holding more than 23 crore investor accounts and reaching 99.85% of India's PIN codes, barring 28. Out of that, at least 25 are airports where we can't do KYC. In the PMS space, we support the industry through robust benchmarking with the Nifty family of indices, continuous index innovation, aligned to India's growth themes and reliable valuation tools that enable multi-asset portfolio construction. Of course, we give you the best order matching system in the world. And now, in at least one segment, we have recently started experimenting where we are getting response time of nanoseconds and not microseconds. 1 second has 1000 milliseconds, 10 lakh microseconds, and 100 crore nanoseconds. So we are now getting into the nanosecond response time world in India. The rest of the world is still talking in hundreds of microseconds in the best possible industries. We also give you, of course, a fair, efficient, transparent, and the lowest cost trading system in the world. And of course, for your business and also investors' interest, the corporate governance standards of India are amongst the best, especially in favor of the outsiders vis-a-vis insiders. The biggest issue in most capital markets is to basically work towards creating symmetry out of asymmetry. The corporates are inherently asymmetric situations where insiders have more information and more power. The Indian corporate governance framework led by SEBI has ensured over 30 years that today we are amongst the most symmetric framework compared to anywhere in the world. We understand that many of you rely on this especially corporate governance framework, not just for compliance, but as strategic enablers. We remain committed to empowering the PMS industry with trusted, forward-looking solutions. Our company, NSE Data and Index, is at your service in that direction. And let me now turn to the trends that will shape the next phase of evolution in PMS. The theme-based and sectoral strategies are gaining ground, from AI to energy transition. Investors are aligning with mega trends, and PMS managers are innovating to meet these expectations. Customized discretionary PMS is becoming the norm. Strategies tailored to specific goals, life stages, and risk profiles are enabling more meaningful wealth solutions. Technology integration is redefining engagement. Digital onboarding, real-time dashboards, and AI-powered insights are becoming standard practice. We are also working on giving some of these comparisons for some of the participants, especially from your industry also going forward. SEBI has just allowed us to partner with some of the credit rating agencies to give this comparable frameworks. So as and when we come back with more details and also launch, we'll come back to you. Regional expansion is a major growth driver. Tier 2 and Tier 3 cities are emerging as new centers of wealth creation. Vernacular communication, regional partnerships, and localized engagement will be key to unlocking the next growth wave. I think AI is going to help you translate some of this multilingual situations very fast without mistakes. Global access via GIFT IFSC, many of you might not have explored, but it's going to be a game changer with the inauguration of the NSE SGX Connect by Honorable Prime Minister Shri Narendra Modi ji. Offshore Nifty volumes were brought onshore every month. It's doing now more than $100 billion of futures in Nifty. And GIFT City now allows PMS firms to launch global investment mandates, serve NRI and offshore clients, offer dollar-denominated and multi-asset products under a globally credible framework. NSE International Exchange is also going to start through its subsidiary, which has been approved recently, to allow you from GIFT City the access across the world in almost all markets, using a single screen and a single way to trade, clear, and settle. PMS can be offered through GIFT City for both inbound and outbound investment opportunities. As I said, NSEIX will soon start global access services, which will enable PMS providers to access most international exchanges and markets in a safe, secure manner as the NSE-IX Global Access subsidiary will be regulated offering under IFSCA's Global Access Framework. This will further democratize both Indian entities offering PMS and GIFT entities offering PMS to access full range of products across the globe. I urge all of you to explore full potential of this new framework that is coming up. The growth of PMS must be underpinned by trust, innovation, and responsibility. Going forward, the PMS industry should evolve into multi-asset platform, integrate with digital wealth ecosystems, innovate across equity, debt, global, and ESG themes, support regulatory maturity and policy stability, uphold transparency, disclosure, and investor centricity. And above all, we must not lose sight of the core duty to the investors. This industry is not about chasing returns alone. It's about managing aspirations, guiding wealth, building legacies, and most importantly, maintaining the trust that you have already created. When I addressed this conclave last year, I closed with a message that still resonates, that you are the Krishna, the guide and keeper of wealth of our investing population. You are not just portfolio managers, you are navigators of complexity, architects of long-term success, and custodians of intergenerational trust. An informed investor is the most powerful ally for any financial ecosystem. Let us make investor education our collective social responsibility. As we move towards a Viksit Bharat, with SEBI's regulatory leadership, Apmi's industry stewardship, and NSE's enabling infrastructure, we are well positioned to build a globally respected PMS ecosystem serving both Bharat and the world. I would like to conclude by congratulating all of you once again for this incredible journey, and especially the Apmi board member, the outgoing president, and everyone else. Let's commit to build a future where PMS is not just about managing money, but about managing trust and aspirations. Thank you. Jai Hind.
Ashish ji, thank you so much. Please stay with me, sir. Thank you for sharing your thoughts with us. Thank you for the continued support. Like you said, the NSE infrastructure, we really, really value your presence here and your insights as well. I'd like to invite Vice Chairman Apmi, Mr. Sushant Bhansali, on stage to kindly present a token of our gratitude to Sri Ashish Kumar Chauhan on behalf of Apmi and the entire community over here. We are very grateful, very grateful, sir, for the time that you've spent with us here this morning and for bringing us up to speed on what we can look forward to. Let's give a huge round of applause, ladies and gentlemen, to Sri Ashish Kumar Chauhan. And sir, since we have your presence over here, I'm going to request you to please help us with the unveiling of the maiden edition of APMI Compendium. This is a comprehensive monthly newsletter. We thank SEBI for providing us consolidated data. This is surely going to act as the industry's torchbearers, give us data analytics, help us gauge market depth, a ready reckoner for the entire PMS community, and now it belongs to all of you. Ashish sir, thank you so much for doing the honors. Have a phenomenal day, sir. Thank you very much. Mr. Bhansali, thank you so much. Okay, so that was our chief guest and our guest of honor, giving us some incredible perspectives on where we stand as a community, where India's capital markets stand, and the future that we can not just look forward to, but be very eager and excited about. I'm going to request my team to kindly set up the stage. You know why? Because coming up next is our very first knowledge session. This is the one you don't want to miss. Because what all of us in the room regularly do as portfolio managers is ask questions to our investors and potential investors to really figure out what is their goal and at what speed do they want to reach it. So this next session is really at the heart of every investor decision making. It's titled 5 Questions to Ask Your Portfolio Manager. let's turn tables. It's about empowering our investors to engage better, asking sharper questions, understanding the very fundamentals of what makes a PMS relationship work better and more efficiently. On this panel, we have voices that you want to hear, so everyone please keep your pen, paper, or your digital notebook handy. Moderating this session is one of the most articulate voices that we know in India's investor education and wealth commentary today. I've personally had the pleasure of listening to several panels moderated by him, and he's here to ask some of the most pertinent questions on behalf of all of us. Personal Finance Editor at Mint, Mr. Neil Borate. Let's hear it for Neil. Thank you, Neil, for joining us here. Please pick your favorite seat. And now let's invite our high-impact panel on stage. Mr. Darshan Engineer, Chief Investment Officer at Narottam Seksaria Family Office, who brings decades of experience in managing family office portfolios with a long-term value lens. Mr. Rajmohan Krishnan, Principal Founder and Managing Director of Entrust Family Office. They have a very client-centric approach and deep expertise in estate planning, succession, impact investing, and they've been managing wealth for several Forbes top 100 Indian families. And we also have Ms. Meenal Goel, representing Family Care Limited, brings a business owner's perspective to portfolio decisions, risk tolerance, and aligning personal wealth with business cycles. Can we have a huge impact round of applause so that they give us the best insights? Welcome to all of our panelists. Please take your seat. And Neil, over to you.
Hello, everyone. So, an unnamed source told me that don't ask tough questions. And my reply was, of course, the audience will ask tough questions. So, I'm not going to take up your precious time because ultimately you are in this business and you have tons of questions from family offices, from the main investors in portfolio, in PMS. So the first half I will ask, and I will be very strict about the timing. I'll hand it over to you guys. So please be ready and take this chance to ask your questions. All right, so let's begin with the main reason why anyone chooses a particular PMS, which is the strategy, right? There's something about that PMS, about the manager that is attractive, that's interesting. So if I might persuade my panel to go down and tell us about how they look at individual strategies, how they pick them.
Thank you for the opportunity to, explain our point of view. But we clearly believe that there is a lot of merit in having PMS managers, associated family offices of our kind. There is clearly a talent pool which we need to bring on. It's not possible for us to get such bright minds to necessarily work for us, but we can work with them through an allocation in some of the products that they do. So I think there's an immense value add that they bring to our table. Besides just an allocation, there's a learning that we have. For example, we just heard the CEO of NSE speak about new mega trends. I think a family office might be constrained in the ability to bring so much knowledge on the table or learning on their own, internalize them. It's important to have a PMS manager who understands this better, trains, of course, his reflection of his position allows us to better understand that. So I think clearly a significant value add, and it's an asset class which has done very well for us, and we've been significant beneficiaries of the knowledge that they brought on the table for us.
Sure. But can you give us some numbers, Darshan? Like how many PMSs do you pick, and how do you ensure, is it value, growth, like you split across styles?
To give you a number, so we've been in this, we've been allocating money for a bit. We have vintages which are as old as about 15 years with us now, relationships. We keep constantly onboarding people who bring relevant skill sets to our table. And I don't necessarily, so there's clearly a gap that we have. So we believe growth and CMID, that small mid-cap space, emerging mega trends, clearly are skill sets that we don't have internally. We necessarily need to onboard them. So we necessarily go and reach out to those people who we believe represent that. and we take our chances with them. But so far, the journey has been very productive and very fruitful for us.
All right, Minal, can you outline your approach?
Hi everyone. So I work at FemiCare. Thank you so much for the opportunity here. Just to let you know, working in one of the largest family office and having our own research team in-house, there is always one challenge which we face is having crossed all the sectors and all the stocks. And this problem can only be solved by a PMS fund manager. For example, we have a team who manages micro cap and small cap stocks. However, it is very difficult, and we have understood over a period of time that it is very difficult to outperform Nifty 50. But there are a lot of fund managers in the industry who are able to do the job. For example, one of my favorite fund manager, Mr. Hiren Ved, Vikas Kemani, we have seen them over a period of time where they are able to outperform the markets. So the key reason to have, meeting new fund managers over a period of time is very important for you to allocate your money to them.
And same thing, some numbers if you can share with us.
Sure. So as at present we have approximately 15 to 16 in-house PMSs, but we keep evaluating new PMSs, especially small boutique houses, for example, which have a small AUM of 300 to 500 crore, because that's the space where you get a lot of knowledge sharing, and that's something we are comfortable with.
Oh, that's interesting. So you don't go too high, you don't want a very large PMS.
Because I think sometimes AUM also becomes a problem for PMS fund houses, and we would, since the book size is so big, it is so diversified, some small boutique PMS houses creates greater alpha for us.
And just to round that off, so do you also decide beforehand your overall sector split or your preference for mid or small cap stocks?
Correct. So since in-house is being managed, which is small cap and micro cap, we would go to fund managers with more of large cap and mid cap, where creating alpha is very, very difficult. And I think giving your money in the right hands always help us do that.
Rajmohan, can you outline your approach?
So, good afternoon. So we are we do a dual role. We are a registered PMS provider as well as we are an investment advisor. So our the thought process is to keep it very simple, and we have been doing this for the last about 13 years. So we take utmost caution when we select PMS managers. Specifically, our main thesis is if we want to do a large cap or a large and mid cap, we prefer mutual funds, and we would not go to a PMS manager for that. And we track themes. We have in-house research, and we track themes. And once we are comfortable with the theme, we go to certain PMS managers and find out if they can do something customized for the theme. And can
you give us examples of themes that you've been bullish on?
So we did, in 2021, we did manufacturing and capital goods. And in the last about 4 years, it has done extremely well for us. And we went to ICICI and we spoke to them. We said, saying that this is the universe which we want. And so we work very closely with the fund manager. And we have some idea in terms of saying that what stocks which needs to be picked and what can't be picked. And in certain cases, we have rejected certain stocks. And it's not that we interfere too much, but at least we need to have a veto when a particular stock comes. And we also did a dividend yield theme in the same time. And specifically, overall, if you look at our, in the last, as more than 10 plus years, we have had only about 4 or 5 PMSs. Yeah, we've been very selective. Yeah.
And you remain bullish on those themes, or now has it changed going forward?
It has definitely changed because we have exited most of it. And yeah, so in fact, we identify themes and then we get in. Yeah. Yeah.
Could you share some future themes that you've identified, or?
Actually, not yet, actually. So we are in the process, yeah, yeah.
All right. Now the next super important thing, especially from a family office point of view, is the expense. and how they see a fair kind of structure for management fee, performance fee, and so on. So if you can start with Darshan again.
So, we don't necessarily debate too much about expenses when we are onboarding skill, because the skill will pay for it any which case. We probably spend some time, where a discussion around a hurdle is. And our question to them would be that, if the cost of equity or, the earnings growth in this country at about, upwards of 12%, which is really what you've been penciling to me, then the hurdle has to effectively start from there. And we're very happy sharing profits with them. So we don't necessarily bring, the cost associated with investing into that strategy as a key driver of any decision, because if I'm going to onboard a skill sets, I think it's going to allow me to internalize that and probably use that capacity on my others. It could be my credit allocations, it could be my private equity exposures. We're able to use the intelligence that they bring on table. So we don't necessarily dwell too much on costs. I think it's a lovely thing. I think some of the guys who I know are looking at me. I'm going to get a drink today from them. Thank you very much. But that's how we look at it. We don't think it's so important.
But Darshan, in that whole debate between
Sure.
a fixed management fee and performance fee, what do you think is more aligned? What do you prefer?
I would love them to share the upside with me. It's going to incentivize them. I think they're going to bring tremendous amount of value to my table if they're going to share it with me. So I'm all for sharing with them. I'm only going to ask them and request them that let's examine the hurdle carefully. It should allow me to cover earnings growth, which the markets are anyways promising. B, it should reflect a reasonable cost of equity, risk that comes with it, and happy to share with them.
So a high enough hurdle that makes sense for you?
We would think that that number should be a meaningful spread over the risk-free.
A meaningful
A meaningful spread over the risk-free, like the risk-free in India is about 630, maybe a reasonable spread over 630 should be where the hurdle should be, and happy to split about that.
Something like a 10%?
I think it's not low.
Okay.
12, 14.
Okay. You're making life hard for them, yeah? Meera?
Yeah, so sorry. Since I work at a Marwari family office, expense plays a very important role for us. Because, okay, let's be honest, a 1% management fees, where there's such a big AUM, and we know we are going to stay invested with that fund manager for 10 years or 12 years. So that 1% fixed management fees getting compounded for 10% does take a hit on your return. But contradictory to that, we believe that PMS also offers you sophistication, right? For example, our family office, we believe we do not invest in alcohol companies or non-vegetarian companies. So while you're filling a PMS form, we get that opportunity to take, okay, please don't take stakes in that. Whereas if I look at a mutual fund who is able to do that job in 60 or 70 basis points, we do not get that customization. So expense does play a role, but we also understand there is customization which comes in hand with us for a PMS fund manager. And yeah.
So you also prefer the performance fee side of things?
Yeah, we are very happy to take the performance fees. However, a 50 bips management fees and then a profit sharing is ideally which would be preferred in-house.
And what's your hurdle rate?
It would be 15%.
Fair. Actually, this is an interesting point in terms of mandates that you can customize with PMS. Darshan, do you also have mandates that you say the PMS should not invest in these sectors or?
So it's not because we have any opinion on that sector. It's probably more to reflect with the principal's personal preference. It could be, tobacco in our case, but that's really where it is. We don't necessarily, we are very happy to give them a free hand because the mandate is an allocation to investing in equity, and I'm sure they're the best judges of it. Because we clearly think they're better than us, which is why we're giving them the money. So I'm happy to give them a free hand. It's a principal's preference to not to invest in tobacco, but that's more personal than anything else. It's not because we have an opinion on that industry.
So it's not a red line for you?
No, that's no red line for us.
Okay. Rajmohan?
So for us, it's slightly different. We look at strategies mainly to define the fee structure. So if it's a very, very differentiated strategy and the stock picking becomes extremely critical for us, then we don't mind actually working in a profit share. But whereas if it's a very kind of a run-of-the-mill strategy. Say, for example, if it's going to be a mid and large cap, I don't think paying profit share is going to make any sense. So we would prefer, and since we are custodians of client money, we are very cognizant about the fee structure, and we negotiate, and we work with the fixed fee in most of the time. Yeah.
It's interesting. It's a departure from some of the other voices. But at what point would you do a performance fee?
No, so that's what I said. So it is, performance fee is purely based on, I would say, a very differentiated small cap strategy or a differentiated theme where the fund manager has to break his head to understand what kind of stocks he needs to pick, where it's not easy to kind of manage set portfolios. But whereas if it's a very kind of a standard portfolio, then it's better to go with fixed fee. Yeah.
Fair.
Yeah.
And what's your hurdle rate?
So we'd be comfortable with anywhere between 12-13%. Yeah.
And do you have red lines also in terms of sectors, themes, kind of stocks you won't allow the PMS to invest?
Not really. Yeah. We give full freedom. Yeah. Yeah. Yeah.
Okay. I'll stay with you on the next question, which is about risk. So typically PMS is posited as a vehicle where you can take more. Excellent. We've been given more time. This is one of the very unusual things to happen in an event where we get more rather than less time. So, coming to the risk question, unlike a mutual fund where there's a 10% cap on allocation to an individual stock in PMS, there is no such regulation. So, do you see concentration as a big pull factor?
See, concentration has again, it's very client specific, right? And particularly when you're not handling retail clients and large corpuses if he needs to manage, risk plays a very, very important role. And the client preferences plays a very important role. So there are clients who are willing to bet on like concentrated strategies, where then they're very cognizant of the risk which is there with respect to the portfolio. So we are very fine, but it's very client specific, I would say.
Okay. Meena?
So so concentration risk is always there and we are aware of it. But apart only from concentration risk, there are a few other risks which is very important while you're deciding a PMS fund manager. At least at this stage, it is very difficult to make money in the market side. That's what we are all aware of. Like macroeconomic risk is increasing day by day. Sometimes we have Trump tariff, we have some Ukraine-Russia war going on, we have India-Pakistan war going on. So that's one major risk. Second, talking about your concentration risk.
Sorry, so how do you deal with that risk when you select PMSs?
So, for example, there is nothing you can do about about the geopolitical risk which is going on. However, fund managers going for specific themes. For example, we had the Motilal Defense Fund system. We had HDFC bringing up with a defense fund. Now we are well aware that manufacturing and consumer is going to play a theme. So we will, in that duration, in that period of time, we will go with theme-based funds rather than a very long period of, investments.
Okay. And so that's about macro. Concentration, what's your solution?
For concentration risk, we would definitely talk with the fund manager as in why he wants to get heavily weighted on one single sector or one single theme. If we feel we are comfortable with that, we are definitely okay to go with that sector.
Sure. But in general, is that an attractive feature of PMS? Why you would go into it to begin with? That unlike a mutual fund, there are fewer regulations to deal with on diversification?
No, that will not be an attraction center for us. That will be definitely a question as to why he wants to go concentrated in a portfolio. We would be more okay with a flexi cap sort of portfolio rather than a concentrated portfolio. Yeah.
Okay. Darshan, any thoughts?
So Neil, I'll just first, just articulate what we do. So one is we are a public markets, equities, fixed income group. We take risk associated investing in these asset classes. So that's a starting point. So when we allocate monies to an equity manager, we expect him to think of this as an allocation to equity in its totality. We are not necessarily asking him to take cash calls on our behalf. We believe that we will take cash calls on our behalf internally. We do not necessarily put any sectoral caps on them because How is because I thought they're better than me, or because we think they bring a certain skill set to the table, which is really why we are allocating the monies to them. So we are going to allow them a free hand, but I'm going to, just to give you a little number, so we decided to sum total or sum up all the individual stocks that we would have internally and including with the manager. We said, let's sum that number up of how many individual line items do we have. So we summed that number up, and then we said, okay, how much of this do we understand internally? And that number came to about a 60-70% depending on each particular sector. So then we realized that there's about 30-40% of great value add that these managers are bringing onto our table. If I'm going to speak to them about putting a sectoral cap on them, I'm going to be speaking about my experience, which is restricted to 60-70% of the overall space that I understand. So why would I do that? Why would I not allow them to, put in their best efforts and make the sectoral calls for themselves? Like, for example, speaking on the mega trends, the fact is that in the recent times, EMS, defense, PSU, they made staggering amounts of market cap in terms of absolute returns over the past 2-3 years. Now, if I was to bring my understanding that PSU is not a great place to be in, we would have lost out a great opportunity. So we clearly don't think we want to put any limits on them. At the same time, if I see something differentiated in them and we want to build our understanding of the subject better, we've been great beneficiaries of the knowledge transfer that we get from our managers. And I think that's a larger takeaway for us than otherwise.
Okay. Now the third big element on which to look at PMS is tax. And one issue that investors face is that you have to pay tax on realized gains, unlike in a mutual fund where there is no tax until you redeem. Apart from that, there's also the question of, can you claim the expenses as a deduction in the return? So if you could help us out with both those questions, Darshan.
Well, it's not necessarily tax efficient, if you were to say, but then the investable universe that you're attracting or investing in is substantially different. You're indexing here, you're not necessarily indexing there. The tax is a question that we have to internalize. But I think we must give due credit to this, the managers themselves. They've understood that you need to hold the stock for a minimum year for more tax efficiencies. We are actually seeing a whole lot of them actually structure their portfolio where we don't see very heightened level of activity, which itself is a good message. I think they're doing it themselves, but as an investor, to the extent where they find fair value or they believe there's a time to take profits, yes, I need to pay my tax.
Yeah, and also dividend taxation, which is another.
But yeah, so I just mentioned to you earlier. So what's the alternative? The alternative is an asset class like debt or any other fixed income product where you don't necessarily want to take on significant amount of credit risk. Then effectively at near 40% plus tax rates. Yeah, so it's a little bit of a give and take, but I guess we will have to live with this.
Okay, Meena.
So see, when you go to a PMS fund manager, you're aware day one that you're going to get taxes. There has to be a tax drag because of the short-term capital gains. The momentum the fund manager might play will give you an alpha in your investment, which you might not get in a mutual fund house. So tax is something which the family offices, I'm sure, are okay with. Apart from that, let me bring you one very important thing between a PMS and a mutual fund, guys. Since you mentioned in mutual funds, you might not have an expense ratio, which is not being able to debit it in your P&L or a tax structure. Now, let's say there's a QIB of any good company coming up. A PMS guy will always come to you, look, you are a good family office, big AUM family office, there is a QIB opportunity. I am ready to put in a ticket size of 500. Why don't you come in and we both put in a ticket size? That perk you will not get at a mutual fund house. So if the cost of that investment is an additional tax or an additional expense, I think we family offices are okay to take that since we are getting an alpha, right? So that is something we are comfortable with.
Anything else apart from QIBs that you get which a mutual fund can't deliver? This is interesting. I didn't know about this.
So sharing of ideas and some access to models directly. For example, if some stock is being looked out in-house and we know from the anchor book, okay, that this mutual fund house or this PMS has looked at it. A mutual fund will have a lot of SEBI guidelines. They might not be able to share the data that frequently with you, whereas a PMS guy will be a little open to discuss that idea with you. So that brings a comfort to us.
A very customized conversation.
Correct.
Rajmohan?
So, see, with respect to tax, I believe that since the number of portfolio schemes is very less, and particularly to us, I'm talking about more about what we do. We go very, very deep with every portfolio manager, what we engage with, and we understand and we track them like for more than about 3-4 years before even we allocate money. And so we understand the style of investing and the way they invest, and we are perfectly fine if there is an opportunity for booking profits or booking losses. And because of that, tax incidence is there. So you can't be very, hard-nosed about certain things. But as far as the managing of the portfolio, the churn in the portfolio is not very undue. I think we are very comfortable with, yeah.
So you would want the churn to be low, so that...
Absolutely, yeah.
Okay. Now, final question from my end, and I'm going to open it up to the audience, so please be ready with your questions. We'll pass around the mic, I think, which is about the new kids on the block, so to speak. So there are two of them. The whole financial services industry almost speaks about nothing else. So one is GIFT and the other is SIF. So Darshan, I'm going to throw both of those to you, your thoughts on both those things.
On GIFT?
GIFT and SIF, Specialized Investment Fund.
Well, so I'll be very honest with you. I mean, GIFT is something that has not necessarily been an area that we've studied very carefully because it's an area that we need to work on. But if you were to ask me whether we are examining investing offshore through the GIFT City window, we think that the $250,000 window for the large affluent families of this country is probably kept best aside for the travel and entertainment. And it cannot be used for investing.
But you have the OPI route.
So that's through a corporate entity, a 10% net worth. So we are examining that. But that 250,000 individual LRs limit, the affluent would prefer to use it in London in summer.
SIF, any thoughts?
No, I'm not best equipped to answer that. I'll let the others address that.
Okay, Meena?
So GIFT City is something which we have not explored, the investments. However, as a fundamental thing which I have understood from two of my promoters, there is immense of opportunity already available in the Indian markets. So why go outside where you do not understand a lot of things? There is so much of macroeconomic risk already outside. And I don't think there are lesser opportunities in India, right? If you're able to get a CAGR returns of between 15 to 18% in India itself, you are not taking a macroeconomic risk. You are not taking a money depreciation risk. So I think we are not yet open to GIFT City route. And yeah.
On SIF, any thoughts?
I think that's something which I'm not aware of.
Okay. Rajmohan?
So we, as a family office, we advocate diversification. And clearly we have a clear roadmap in terms of what needs to be done with respect to the asset allocation with respect to international monies. We work both ways. We take monies out and manage it there. And we are in the process of exploring some GIFT City options. We have not yet deployed monies through GIFT City. But we are very, very cognizant that we need to do diversification. It's just not for returns, but for the sheer geopolitical risk. Yeah.
So would you do it through a PMS, through NAIF? How would you approach GIFT City inbound and outbound?
No, GIFT City, we don't mind using the PMS route, okay, and we are evaluating certain options. Every option possible we'll use, but as of now, we are in the evaluating stage. But till date, we have transferred money outside India and been managing there. Yeah.
As an outside of GIFT, not using GIFT City?
Yes, no, not using GIFT City.
Okay.
Yeah.
It's a new thing, so it takes time.
Yes.
Brilliant. All right. So on that note, I hope, okay, there's a hand in the center. So I'm going to go, okay, this way, systematically center, then left, and then right, okay? So can we pass the mic, please?
Hi, this is Gautam here from Mire Asset Sher Khan. I've got 2-3 questions. First is PMS part of your core or satellite portfolio? That is one, because obviously there are so many strategies. And this is, for all, because that kind of gives a sense of the space you are in and how you manage the money. The second question is, do you see yourselves as successful fund manager selectors? Have you actually done any evaluation on that front? And if yes, how did you go about it?
So this trick question is for Minal. Okay, so I'm going to make the attempt on this one. So I need to hold my job. So the allocations to PMS are part of the overall strategy, but that's a meaningful part of our allocation. And it would be fair to think that some of the vintages that we have in our portfolio in terms of the managers, they've been with a 15-year vintage with us. So an allocation done is usually not pulled back. It is pulled back only where we believe that the team has gone through a significant transition and it's not something that we are familiar with. It could be potentially a change in the ownership of that little, that particular management house, or somewhere, we are not able to deal with the compliance requirements of my settlements, my mid-office. These are only a few exceptional situations in which we pull back an allocation. Do we stand with the manager when the markets are not treating him well? We certainly do, because we've spent a lot of time when we decided to onboard him. And I think it's in any investor's lifespan, there could be a few poor years, and we wouldn't want to judge the capability of that fund house, that team on that 1 or 2 quarters or 1 or 2 years, and that's why it'd be fair to think that we don't even track numbers like monthly returns and how are they doing relative to the benchmark, because it's just too granular. It's pushing them too hard, and it's not necessarily going to bring any significant value to our table. And in terms of whether it's been a successful outcome for us, I would like to think that, of course, all of them have outperformed. The PMS Bazaar and the Apmi publication will tell you the meaningful outperformance that the managers have done. But let me share with you that, when a mega trend like EMS, defense, precision engineering, or now, for example, AI, ML, that's just heard from the CEO. When I'm able to internalize some of those learnings in my organization, my family office, it would make my team stronger, better, because we clearly believe we are a intergenerational family office. So we are holding this to be passed on to the next set of people. So someday Mr. Engineer will move out and a new bunch of people will come in. This new bunch of people needs to be trained today with the emerging trends, because your Nifty may get reorganized at some point of time later, but the trend is going to start today. So that's how we see this as a subject. I hope I've addressed well, but I think I'll leave it for the rest.
So first to tell you, Mirai is our 8% of our portfolio. So definitely it's the core portfolio where we give money to PMSs and mutual fund. Because like I mentioned, it's not easy to manage entire money in-house. It is a very
But the Mirai PMS or the Mirai mutual fund?
Mutual fund. So Mirai has a mutual fund only. So PMS is a mutual fund. That's definitely a core portfolio, I believe, of a lot of family offices. And talking about onboarding them, it's very difficult, right? Because you need to select the right fund manager. And how do you decide that? First, the experience of the fund manager, whether he has seen the dot-com bubble, the 2008 crisis, demonetization, COVID, the recent macroeconomic factors. Now, let's say you have a tick, okay, the fund manager has done this. And what are his future expectations? For example, what theme is he going to play? What returns has in his mindset? Okay, I'm going to, let's say, deliver somewhere between 15 to 18%. Or a 2% alpha over a Nifty 500. So that is something, what are his future growth plans? not even after deciding and asking a lot of relevant questions, your red flags in the PMSs which have been there previous, what have your learnings been? There has been times where you have selected a wrong fund manager. Now, how do we decide that the fund manager is wrong or it's right? So if every of your fund manager is able to hug the index, and there have been consequent time periods where where one fund manager has always underperformed even your Nifty 50, and that has not been only 3 years, 2 years, 5 years or 6 years, then you realize that the fund manager is doing his job wrong. But do we exit that fund manager? The answer is no, because now the fund manager is here, right, which is at the bottom. Exiting him at that period of time will be a wrong decision, because there of course have to be a management change after that. And once you have a management change in the PMS, and that's when your PMS starts performing. So core portfolio, yes. Selection is a very difficult task, but we do stick to those fund managers for a very long period of time.
But if the management change doesn't happen, then?
Usually, if you see, there are a lot of fund managers which has gone through a cycles, and now if there is no change in the management, then definitely we would like to exit the fund manager. That's the last call which would be taken.
Fair. I'm going to come to you, Meenal and Rajmohan, both on a relevant related point, which is, as per SEBI regulations, PMS are compared with the Nifty, and I think Nifty 500. There's only 2-3 benchmarks which are not tailored to the strategy of that PMS. Do you follow those, or you prefer going into more customized?
No, so we have a synthetic return. For example, if a PMS fund manager has 30% large cap, 20% mid cap, and 50% small cap, we create our own in-house return where we take 30% of Nifty 50, 20% of Nifty mid cap, and the balance of Nifty small cap. And this we do it every month. So we know the market cap of the fund managers, we know what is the index, and then we create our own synthetic returns. And that's how we find whether he has overperformed or underperformed.
Yeah. So to answer your question, it's a core portfolio, because equities, PMS plays a PMS, AIF, mutual funds. These are the three options when it comes to listed, and all of them play a very important part when you have a portfolio getting constructed. Particularly selection of fund managers, we have a very, very different philosophy, because we believe in small is better. So we don't we don't over diversify with respect to PMS fund managers. We track the fund manager for long before we deploy monies, and once we have deployed money, we stay with them. Actually, we stay with them for long term, and unless there is something catastrophic which happens, we don't believe in exiting the fund. Yeah.
Just to go back to what you said, Meenal, on the synthetic benchmark, but the hurdle rate is calculated by law on the official benchmark, right?
Correct, absolutely.
That creates a mismatch.
That's on the official returns, right?
Right, but doesn't that create a mismatch? Because if they are crossing that 15% on a Nifty, but you are evaluating them on a, let's say, mixture of Nifty and small cap.
No, I think a lot of fund managers have understood that Nifty 500 is not the right benchmark, right? Because if your portfolio is 60%, let's say 60% mid cap and small cap, and as per SEBI, you still benchmark its Nifty 500 and then you show outperformance of 2 or 3%. That's not the right matrices. About the hurdle rate, usually it works that, let's say the fund has performed 16% and your hurdle rate is 10 or 12%. So there's no benchmark in the picture, right? So the return, so the fee is based on the actual returns and the hurdle rate, not the benchmark returns
agnostic.
and the hurdle rate.
Okay. Yep. Question on the. Okay.
Myself is Iqbal Singh from IFM. I have a question to all the panelists. What are the 3 key attributes you look at in PMS? Top 3 key attributes while selecting any PMS?
Can I take it? Yeah. We look at the theme. We look at the fund manager experience, and we look at the past track record. These are the 3 things which are very critical, actually. The theme, the fund manager experience, and the track record.
So first, the thing we look at is the returns, of course. And the second most important thing is the portfolio. Okay, whether what stocks have been picked up by the fund manager, are we having those stocks in our portfolio? So we understand the thought process, right? That if a portfolio manager has 10% of a stock, which we also has it in-house, there's definitely some similarity between our thinking. So returns, portfolio, and the AUM of the fund manager is something which is significantly important to us. So yeah.
So that was a trick question, because I know some of those people are sitting here who I trade and transact with. So, but nevertheless, I'm going to focus a little on where we spend the maximum of time. We want to build relationship with the team, and to understand and know the team and their pedigree is actually the primary driver. Like for example, today when you pick up, this mid-size, curated boutique PMS houses, you probably have the founding team bringing in aggregate about 100 plus years of work X on the table. We believe that that should be a good, fair starting point to give them your time and attention and to evaluate what they're doing. Because they would have gone through the cycles, they would have done the .com, they would have done the 2008, Lehman, and so they're seasoned investors. They've gone through the cycle. India, the cycles have been quite painful. So if these people have transited those cycles well, we believe that's a good starting point for us in terms of evaluation. We prefer, fund houses which do not necessarily have very large corpuses, because it allows them the flexibility which maybe sometimes a larger mandate doesn't allow them by virtue of the market cap itself that they cannot address. So that's the second preference. And that's really what it is. I don't think we have a third one that you're trying to search. I don't have one. I think it's the team that manages, and we do clarify with them that there could be an instance where I'm going to reach out to you for help with something that you have in your portfolio which aligns with my interest, could be in the public place or the private space. I want you to spend time with me and take me through it. And I think that's the best outcome that we've got so far from our managers, because we've been able to supplement those efforts on our private and public investments incrementally. I think that's the beauty of this product.
Can I ask a question?
Yeah, please.
Dilip, impetus Artha Sudra. Part of the answer for the question which I had in mind, Mr. Engineer has already answered. My question is, PMS is not supposed to be a labeled product. It is supposed to be a customized product. However, every PMS will have multiple investment approaches. As a family office, would you be looking at more customized product instead of following an investment approach which is already structured by a PMS? That's the first question. Second question is, how frequently, after engaging a portfolio manager, how frequently would you interact with this portfolio manager in a yearly basis? And what are the 1 or 2, 3 points which you would be discussing when you engage them thereafter? Thank you.
Okay, that's a loaded question. So, customization is something that we hear a lot. But I would like to think that I want to be aligned with what they do principally for all their clients, because that's where the best efforts are aligned. I'm aligned with everybody else that they may have. It's not our preference to go and pick up thematic ideas. We do it very infrequently. There's probably 1 or 2 of them where we thought, okay, this is a great mind in, let's say, in healthcare, when we go and pick and get ourselves associated with him. But otherwise, we don't necessarily customize. But I would, if these people promise me that we are customizing for a lower fee for you, I will probably look at it. But that doesn't usually happen. And in terms of how often we interact with them, well, I think the proof of the pudding would be for you to ask them that we rarely bother them. As long as they're delivering the MIS on time, as long as we get the data that our mid-office or the settlement needs, and we interact with them certainly once in a while, because you want a little more understanding of a subject that interests you in what they've built in your portfolio. So the portfolio sometimes does meaningfully transit to a meaningfully large allocation to a certain sector. And I've been fortunate, so we have an internal team of about 7 people. We have about 150 years of work internally. So, sometimes our thoughts are aligned with the manager, and we just reach out to him that, buddy, can you please help me with this? I want to supplement my learning. And that's really where it is.
So customization is something which we avoid, and we have learned it over some period of time. I'll simply tell you why. Let's say a fund manager is okay to make a small product for you, specialized PMS of 5 family offices of approximately, let's say, 500 crore. And then he has a flagship product which has 10,000 crore of AUM. It so happened to us, which we have seen over a period of time, that the fund manager forgets to actively look at the PMS, okay? And that's where you start under delivery. That's what we have seen over a period of time, sir. Because that product is so niche, there is very less churning. And then you see the underperformance starts coming up. So we avoid customization as such. And sorry, what is the next question? So, yeah, like he mentioned, we do not bother our fund managers very frequently. Once a year, as far as we are able to see the returns, everything going good, we are good. And we would like to meet them once a year just to understand where the market perspective is, right? What are they doing? What new is there in the industry? What is something which we can work on together? So once a year should be good for us.
So, if there is no customization, then mutual fund is a great vehicle to invest, isn't it? So, customization is a must when it comes to PMS, portfolio management scheme. To what extent one can customize is also a question which each one is the best to understand. But typically, it's very important that a PMS vehicle can't be very, very general like your mass investment vehicle. So it has to be customized to a certain extent, definitely. And we look at customization to a lot. But when you say customization, to what extent? That is also needs to be understood. And but definitely not a model portfolio approach. That's something which doesn't work for us. And in terms of frequency, yeah, we believe interacting with the fund managers very regularly. There's no set frequency, but once a quarter will be good. Yeah.
All right.
Can I ask?
Yes, but after that I have to go to that side because I promised everyone. Please go ahead.
Okay. So what we have seen, we have worked as wealth managers with companies like HDFC and ICICI. We have seen that the entry in a PMS is very well timed, but there is no exit call given when the theme is played, assuming a value theme is there or a particular manufacturing, whatever. So I don't know, what we have seen is that it's very difficult to give an exit call on a PMS, which I think in a NDPMS will be more easier, whereas in a DPMS it's slightly difficult. And when we say long term, he rightly mentioned that we give our funds for long term. How do you define long term in a PMS? You know, we have an experience of 20 years. I have rarely seen any fund manager playing, doing well in all the cycles. There are themes that they play well, and after that, we are sticking to the fund because the institution can't give an exit call for a huge AUM like that. Now, I'm on the other side. Now I'm an MFD, an independent person. I'm more agile. I can take those calls. But normally what we have seen is in the flagship products or thematic funds, exit becomes a problem. Here, the entire discussion, what we are seeing is family office clients. Can we also throw some light on regular clients? Are we saying that this is only and only for sophisticated family office 100 crore plus clients? There could be clients with a 25 crore or a 10 crore AUM. If we are thinking that this industry has to grow, then it has to widen its base as well. So these are my two questions. How do you address this part about exits from themes, if it's so customized? What is the time horizon you think you play with the fund manager? Rarely we have seen PMSs for 20 years. Yeah, there are some fund houses, I've invested in them and they have given that returns. But we have seen clients losing their patience, when the fund doesn't do well. So if you can address the other side on the regular clients and not just family office clients, please.
Right. So on the third question, we'll shortly invite two excellent PMS managers to come and join the panel. So they'll address that question. First two questions, please.
So the question is what? It's about what is long term, is it? So as long as you trust your fund manager, and basically said that's the most important thing according to me, the comfort what you develop with the fund manager, and the trust comes through track record and consistency in terms of what he speaks and how the portfolio is getting constructed. As long as you're comfortable with that, and the review process has to be very robust. You keep reviewing the portfolio very regularly. As long as there is consistency in approach and you trust the fund manager, you can stay with them forever, meaning in terms of there's no need for churn, because ultimately the fund manager will take the appropriate calls depending on the market cycle. So when the cycle changes, there are different stock cycles also. So he will change accordingly. So I think that's the most critical part. When you've sorted that path, actually then long term is and of course it depends on the clients too, right? Like for example, as you said, saying that the client gets impatient, and that's where the advisor comes in. You'll have to handhold and tell him, saying that there's no need to panic and he'll have to wait it out. And so there is no fixed rule as saying that this is short, this is 3 years is long term or 4 years is long term. I think constant review is what is very important according to me. And as long as you review it very regularly and you trust the fund manager, then you can stay with the fund. There's no need to panic.
Meena?
So you're right, exit is very, very, very difficult. You don't know when to exit, right? So the exit is done only in 2 scenarios for us. One, when you're taking a cash call. However, when you're taking a cash call, there are 20 PMSs. Now, how do you decide which PMS you have to exit? So yes, it's very difficult, and you do make some wrong selections also. So one approach we recently followed is you trim down 10% of every single fund managers. That's one thing we do. But how do you decide, right? You have the best 10 fund managers in your portfolio. Now you have to take a cash call. Everyone you feel is good long-term fund managers. How will you decide? And you have to take a cash call because you're not comfortable with the market. Now, if you redeem one fund manager entirely, or let's say 2 fund managers, and you go wrong in your decision, rather you redeem 10% of every of your funds. So that's one approach which we follow during exits. And secondly, if the fund is underperforming at every cycles, so that's the second exit which we do. And depending what time period, there's no ending to it, right? You're comfortable with the fund manager, you stay invested in for 10 years also, because ideally it's a relation you have built with him. Now today if you decide to exit, the first thing is the fund manager is going to call you, right? Why are you exiting it? Stay with us for some longer period of time. So there's no specific time horizon because it's forever money, that money is not going to get, if you remove it from one fund manager, you now have to find another fund manager. So there's no specific time period, and we don't know when to exit. So that's something which we are still working on.
Darshan, do you want to supplement?
So I quite resonate with what Meenal said. She said that the reinvestment risk on taking a cash call is meaningfully high. And I did speak earlier that we don't necessarily go and pick thematic, sectoral specific funds. We believe that the team that we've chosen is best equipped to manage that money well for us. So we consciously stay away from a sectoral, allocation. To the few that we have done, we believe that it has an attribute, like an healthcare would have an attribute to an FMCG++. We believe that what we have chosen or decided to work with is a best in class mind with a team with a meaningful amount of work, years of work X. We think we are happier if it continues to transit. We would actually probably be very happy if the manager one day decides to call and say, look, I think Darshan, we need to take a cash call. We are taking it. Do you want to take it in terms of a redemption, or do you want us to build cash in the PMS? We've been beneficiaries of such advice, and we've said, okay, hang on, I don't intend to redeem, but if you believe this market requires a cash call, please take it. I'm not going to hold it against you. And that's worked very well for us. So I think we will stick with that. I think the reinvestment risk is extremely high. And to your specific question on small investors, so I'm going to speak about me as a small investor. I've got a fund manager at home. She said, never take a call on gold and silver. We never invest in children's education funds. So I've taken that very seriously. The rest, I put it in mutual funds or ETFs, and I said, okay, let it compound.
Fair.
Hello. Excuse me. I have one question. Neil.
Sorry, I have to go to that side of the room. I said that I will give everyone a fair chance, so I'll just come back. But can we get somebody from that side of the room, please? Please go ahead. We'll just get the mic to you, just a second.
We'll catch you. No, in a sense, you can speak out. We'll catch you.
No, let everyone hear. Just 1 second.
Okay, in the interest of clarity, speak.
My name is Dhaval Chitre. Thank you so much for those valuable insights. To top it up, I have 2 questions. First one, maybe you have partially already covered to answer her. How do you handle client communication, especially during underperformance, when your strategies might not work as you have decided? And the second one, maybe Neil will also answer. I would like Neil to answer as well. What will be the one-liner for all those investors who are eligible but still having some fear factor to come into PMS? What will give you, what all will you say to them? Neil, as we all know about your personal finance excellence, I would like to hear it from you as well. Thank you.
So I'll answer the second question first. What is that one liner when you give your money to a PMS fund manager is be patient. He's there to take care of your money. He's going to make you returns, not today, not tomorrow, but day after. So be patient is one line you have to understand before investing in anything, whether a PMS, mutual funds or direct shares. And your first thing was underperformance. Very easy, no? If there is underperformance in the portfolio over a period of time, you call the fund manager. Let's discuss. Let's know what is your future strategy. Let's talk on it. Why is this underperformance there? There has to be some stocks which has been picked wrong, right? And that is being continuing. And that's why there you have underperformance. So has the fund manager understood that he has made mistakes? And is he ready to bring the change in the portfolio? Or is it going to continue? Or is there some thesis behind still holding those stocks? That one-on-one discussion with the fund manager or their team will be very helpful for you to understand why is there underperformance and what is the future roadmap for it.
How does the PMS manager communicate?
To the clients. No, the so yes, PMS fund managers proactively, their team do reach out to you. Of course, when they also see underperformance, fund houses do see a lot of redemption pressures, right? So their team do reach out to us as in this has been the reason. And then if you want to have a detailed meeting, you can always do that with them.
Okay, so on the last question.
I have one question, please. This side, right hand side, Neil.
I just have to answer his question. Once I'm done, I'll come.
Last question, I would like to ask one more question. That's the reason I said.
Granted, done deal. So on this, I would say the PMS manager has to offer me something different that's not there in mutual funds. I am predominantly a mutual fund investor, and I think most people, especially on the retail side, are best off in a mutual fund regulated product. So really it has to be something different that justifies the extra research I have to do, the tax implications and so on. Okay, now I know I agreed one final question from here. I have to give everyone, I took 2 from the middle, so I have to take 2 from the side and we will come on the right. Somebody, yeah, please go ahead.
So, hi, I am Mayank from Northern Arc. So, while everyone wants to make most of the uncertainty, that is equities, I belong to a debt PMS. And there's one question which I often wonder, that while we have mutual funds, we have products which are giving you certainty and good returns, but there's also a universe where you can get more than 7%, less than 15%, which often happens to be a hurdle rate. But I don't see any traction majorly happening in this universe. So I would like to understand from panelists that what are the questions or doubts that investors would have, be it family office, be it regular investors, that they won't prefer certainty of, let's say, a good credit rating, a decent visible cash flow, visible money coming in. So, I mean, we haven't seen much traction or AUM there. So that's also other side of the coin, I would say. So that's my question, that what would be the comfort that we can give investors in terms of a debt PMS that would grow the AUM? Because see, we all know what the developed countries have in terms of debt AUM, right? And we all know what India has. So growth there would be fantastic, actually. That's my question to everybody. Thank you.
Yeah, you want to go?
Minal is ready.
Yeah, so I think there is quite a bit of awareness which has come in, particularly with respect to fixed income, higher return yielding fixed income products. And people have started deploying monies. And specifically in the last 2 years, after the fixed income mutual funds have started giving very low returns. You're seeing private credit, you're seeing venture debt being looked at very actively. But there is a specific market for it. If you really look at, if you want to take risk, obviously a client will say that, I know equity is risky, but knowing fully well that's risky, I'm putting my money. But fixed income, generally in people's mind, is to give safe returns. Okay, if fixed income also carries risk, then people are not too, comfortable investing in fixed income and taking that risk. So the advisor's responsibility is to convey that what commensurate risk what they take and what is the kind of additional returns what they make. And that's happening. And you're seeing there is a reasonable amount of flight of capital moving from fixed income mutual funds to debt PMSs and credit funds, which has been happening these days. Yeah. I don't think it's as bad, actually. Yeah.
But do you allocate to fixed income?
Yeah, we do. Yeah.
Okay. Meenal, Darshan, do you want to supplement that answer?
So, on fixed income, our allocations are more liquidity held for, acquiring assets, investing into, businesses, strokes, shares, PMSs, whatever you may call it. So we look at liquidity as you're holding it for deployment. It's not necessarily an active allocation to debt per se. But in the past, we evaluated it. So, when I talk about a product, when you're talking about a 12-15% return, these products tend to have a lock-in. So, in the event of a liquidity call which I want to take, I may not necessarily get a liquidity call through. And it's very difficult, it's very not necessarily easy to unload such risk in the market. If you are able to establish the proof that such risk can be offloaded easily in a reasonable span of time, I'm sure people like us would love to look at them. But at this point of time, I think anything with 12 and 15% tend to be locked-in products. We are not too sure that we have the skill sets to understand the credit risk that comes along with it and how to deal with it. So we think that we are not good at it, and so we're happier sticking to what we understand, which is a little more simpler, which allows me liquidity on call. That's my submission to you, please.
Meenal? Same. Okay.
And to answer your question, the last 4 years have been a song for equity market. So generally people tend to, sway towards equity. If you see 2 years of bear markets, then you will see AUM swelling. Then these kind of talks will never happen. Let me tell you that.
Okay, last two questions. Gentleman who had raised, yeah, please go ahead, sir.
First and foremost, Rashim has a lot of guts to put this panel into the place, whereas a moderator, Neil, who is a great guy and a fan of yours, as a family office, I'm just assuming that you people must be handling ultra HNIs. How do you people convince your customers under PMS when their expenses which they pay as a fee to their fund manager is not being allowed by the income tax forms? As a family office, how do you people convince the customer to continue to invest in PMS, whereas if you invest in AIF or in mutual fund, it is absorbed by the income tax?
Okay, who would like to take that?
I think you're aware on day one, right, that a PMS fees is not going to get absorbed. So first you have to be very much okay and comfortable with that. But however, every year if you see a debit in your P&L, let's say a fee item which you're not able to absorb it, the only way is a PMS guy has to give you alpha over a mutual fund. And that he can only do when you're...
Do you think that might be a wrong communication also to the customer? No? That's the reason people come to PMS saying that it's going to give an alpha over the mutual fund, and people like Neil Bote comes and in your back. No, it's not. So, as a family office, if you people see this is going to be the future, where are we representing this disparity? Why we are not representing this major disparity of fee being paid to a fund manager? There are fund managers who charge only profit sharing. There are fund managers who give hurdle rate plus profit sharing. There are fund managers who give the straight fee also. Three kinds of fees are being charged. But if I need to build a 1,000 crore book in PMS for a single family of 1,000 crore, let's assume a fund manager like Banyan Tree charge 10% as a profit sharing. If they do 15%, they'll charge 10% of the fee. It's not getting absorbed. It's a huge cost in the long run.
But then
How do you people really have I would like to know your efficiency, how you convince so that I can go back and convince my customers.
So customization is something which a PMS is offering you over a mutual fund, right? Now you need to be comfortable with that first in your mind, that a PMS fees is never going to get absorbed. You need to be very comfortable with the fund manager, his thesis, and once you're okay to take a bet, only then you enter a PMS. That's the only answer we have.
All right. Thank you, sir. Last question from this side, behind second row. Yep. Second row, right behind him. Yep. Please go ahead.
Since you deal with multiple PMS, how do you report to clients? Because clients get data from so many PMSs, and you say if they have 15 PMSs, is there any tool that you use which combine all those and then report it? Just want to understand that.
So I think Apmi is the site which combines all the PMS returns.
No, the individual, if you have one client who invests in 10 PMS, each 10 are different portfolios, right? So how do you combine it and report to the client their portfolios, not the overall portfolios? Do you have any report, or I don't know?
So I represent a single principal family office. We use a platform to capture our data and report. And it would be fair to say that detailed performance analysis, pre-tax, considering that tax is a matter of discussion here, are reported on a monthly basis. We tend to have a cutoff which is about the 10th of the following month for the data of the previous month. So we prepare detailed MIS on a platform and it's circulated. It's largely on a platform that's online.
If I may ask, it's an in-house developed one, or is it
No, sir,
available?
it's outsourced.
Outsourced.
Yes.
Okay, sure. Thank you.
Meenal, Rajman, do you want to supplement that, or?
I think that's
okay.
what even we do it.
All right. I'm afraid we are out of time. Thank you so much for being such a lovely, engaged audience, and to the panel who took some really tough questions. You lived up to the promise. I said audience will ask tough questions. You guys did just that. Thank you so much.
Thank you so much, Neil. Thank you very much. I'd like to invite Mr. Viren Ved and Mr. Sushant Bansali on stage to present a token of our appreciation. Everyone else, my friends, please stay in your seats for exactly 2 more minutes. Trust me, you don't want to leave the room. Please stay in your seats. Yes, Mr. Ved, Mr. Bansali, please join us here and please present a token of our gratitude and our appreciation. I call them high-impact panelists, and that's exactly what they delivered. A knowledge session like this, my sincere apologies to those of you who have questions that are unanswered, but I can assure you the panelists are going to be around for a while, so please catch them one-on-one and please ensure that your questions are answered. Requesting all our panelists to please come together for one final group photograph with the terrarium in your hands. And my dear friends, one more round of applause for our amazing panelists. Thank you very much for your time, for your invaluable insights. We really appreciate it. Thank you once again. Have a phenomenal day. Neil, thank you so much for asking the most pertinent questions on behalf of all of us and nudging all of us to have this very open and honest conversation. Yes, sir, that's yours. Okay, ladies, gentlemen, and my dear friends, you have been serving portfolios with precision. This afternoon, we are prepared to serve your palate with passion. What's coming up next is a gourmet asset allocation like you have never seen before. Welcome to the tastiest initial plate offering, yes, at this very conclave. This curtain to your right-hand side will now rise and will unveil 28 chefs who are ready to give you stir-fried listing that you have been waiting for. But I'm not going to do this curtain rising by myself. We are going to do it all together. So wherever you are, request you all to please rise and join me in counting down to 5 and be prepared for a taste for your senses. So with me, all together, here we go. 5, 4, 3, 2, and 1. Let the curtain rise. And everybody, वहां से तो बहुत आवाज आ रही है, यहाँ से भी make some noise, come on. And there they are, ready to welcome you. A feast for your senses at the second. It's time to enjoy this feast for your senses. And please, be back in your seats at 2:30 p.m. sharp for segment 2. Bon appetit, everyone. Bon appetit.
Me gusta bailar en cualquier situación, sentir que me moja la transpiración. Me dicen la reina de la juventud, LISA, pero soy como tú, si la noche es oscura.
Empower Wealth, your gateway to modern wealth management. Manage multi-asset, multi-currency portfolios seamlessly. Integrate with global and domestic markets. Streamline with AI-powered analytics. Manage real-time risks and automate compliance checks. Book a demo now.
The unique strategies of portfolio managers are invaluable in investing. Wealth Spectrum can help you achieve greater efficiency and elevate client experience.
Introducing Empower Wealth, your gateway to modern wealth management. Manage multi-asset, multi-currency portfolios seamlessly. Integrate with global and domestic markets. Streamline with AI-powered analytics. Manage real-time risks and automate compliance checks. Book a demo now.
The unique strategies of portfolio managers are invaluable in investing. Wealth Spectrum can help you achieve greater efficiency and elevate client experience. You gain a 360-degree view of the managed portfolios, enabling you to focus on what you do best: designing optimal investment solutions for your clients.
Introducing Empower Wealth, your gateway to modern wealth management. Manage multi-asset, multi-currency portfolios seamlessly. Integrate with global and domestic markets. Streamline with AI-powered analytics. Manage real-time risks and automate compliance checks. Book a demo now.
The unique strategies of portfolio managers are invaluable in investing. Wealth Spectrum can help you achieve greater efficiency and elevate client experience. You gain a 360-degree view of the managed portfolios, enabling you to focus on what you do best: designing optimal investment solutions for your clients.